We're in Denver, Colorado at EnerCom's 19th annual Oil and Gas Conference. I'd like to welcome Phil McPherson, the CFO of Citadel Exploration. Good morning, Phil.
Good morning, thanks, Quinn.
Now, your company labels itself as a pure California company. What do you mean by that?
Yeah, Citadel is based upon 4 generations of California exploration. So our CEO and his family have been active in California for almost 100 years. And so all of our projects are based upon California exploration. We have a large database of 2D, 3D, and kind of a boots on the ground mentality that gives us a competitive advantage in California. So we're happy to be there, and it's an underexplored area, and we feel like we've got a great advantage there.
Phil, you're operating in the San Joaquin Basin. Tell us about your key projects there.
Sure. The San Juaquin Basin is the largest basin in California. It produces about 400,000 or 500,000 barrels a day. And we have one key project there right now. It's called our Alumni project, where we leased up about 3,000 acres from ERA. ERA is a joint venture between Shell and Exxon. And this is an area that's pretty prolific. There's been some discoveries going back into the 60s and 70s there. The CEO's father actually made a discovery there in 1986 of about 20 million barrels. So it's, again, an area where we have a lot of knowledge base, a lot of history of working in. And we were fortunate enough to lease up this acreage from a major that really didn't want to do any exploration work, which is pretty common nowadays. The majors like to let the little guys do the work, explore for it, find it, and then tend to buy us out when we've made a discovery. So this area is categorized as a stack play area. We're targeting the Stevens Sand, which is a portion of the Monterey Shale, if you want to call it that, which is the big buzzword out there. And it's about a 12,000 foot target, and we're permitting 2 exploration wells there right now. We expect to have those permits probably in the 4th quarter, with drilling to commence shortly thereafter.
Project Indian is your heavy oil project. Can you tell us about this project?
Sure. A lot of people don't know California, about 60% of the oil in California is produced is heavy oil. And what we mean by that is it's oil that is not mobile without stimulation. And the most common way to stimulate that oil is to inject steam in the ground and do what they call thermal recovery, where you're basically heating the oil, lowering the viscosity, and then pumping the oil out of the ground. So our Project Indian is a heavy oil project in the Salinas Basin. The Salinas Basin is north of the San Joaquin Basin along the coast. It's a relatively underexplored area, except for one giant oil field called the San Ardo oil field that's produced about 600 million barrels over the last 50 years. So we're about 30 miles north of that. It took us about 7 years to permit our first well there. We drilled that well in January. We steamed it in May, and we're happy to report that we're now producing the first oil on this lease in over 100 years. This lease goes back to John D. Rockefeller in 1908, leasing this land up. So it then went to Chevron. Chevron sold out of most of their California undeveloped acreage. My partner picked it up through a joint venture in 2007. And then, like I said, we permitted it and drilled the well. We believe that this discovery is one of the largest in the basin in probably 20 or 30 years. So we're pretty proud and pretty excited about it for a small company. And our next step there will be to expand our pilot facility, go into full field production, and ultimately we could drill as many as 500 to 1,000 wells out there over the next decade. So it's a pretty big project for little Citadel Exploration right now.
Phil, earlier you mentioned thermal recovery. Talk more about that, and what's the key to making a project economic?
Sure. So in order to do a thermal recovery project, you inject steam in the ground. And the number one way to create steam is to boil water. So you have to burn natural gas. So right now we have very low natural gas prices and very high relative oil prices. So it's a great time for thermal recovery projects. What we need to identify and prove is how much steam it takes to get a barrel of oil out of the ground. It's called your steam to oil ratio. And in California, your average field is somewhere between 3-to-1 to 5-to-1 on a steam to oil ratio. And that would equate to somewhere in around a $20 to $30 per barrel operating cost. So with oil at a $90 to $100, and natural gas at $3 or $4, we can have huge economics on this type of a project. What's nice about California also is that we're sort of landlocked on an oil basis. And what I mean by that is the state refines 2 million barrels a day of oil for all the cars on the road, but we only produce 600,000 barrels. So the rest of that oil comes from Alaska, Ecuador, Saudi Arabia, other places across the globe, all of which are based upon Brent pricing. So where some producers here in the U.S. in the mid-continent are getting a discount to West Texas prices, we're actually getting a premium to West Texas and closer to Brent prices. So it's really a great time to be in California. It's a great time to explore there, and we feel like we're onto something pretty big here.
Well, Phil, we wish you folks all the best of luck.
Thank you, Quinn. I appreciate it.
Thank you.
All right.
I'm Quinn Nguyen for oilandgas360.com.